Hello and welcome to Morning Trade with Money Control. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends, and most importantly, your queries during the course of the show. So guys, keep commenting on our live feed and we'll have your questions addressed by our guest. Before bringing them on board, let's see what's in store on today's episode. First up, I want to talk about the global handover, which was rather muted, I would say. European stocks closed lower yesterday. Investors reacted to the latest inflation data. Stock 600 closed about 0.9% lower, with almost all sectors in the negative territory following the inflation numbers. On Wall Street, the markets again closed lower after June inflation data came in hotter than expected, hitting its highest level since 1981. This stoked fears that Fed Reserve will have to hike interest rates more aggressively in the coming months to bring down the price increases. The US 10-year yield slips back below 3%. Shares in Asia trade mixed this morning. SGX Nifty trades lower, indicating a start with minor cuts for the Indian market. And on the show today, we put the spotlight on ACC, MINDTREE, TATA METALIKS and TATA Power. What's trending? Well, the higher than expected US inflation numbers, its impact on the markets world over, and Fed Reserve's next rate hike. We're joined by Peter McGuire of XM Australia to talk about all that and more. Peter, good morning and thank you for joining us today. Want to first up address the headline number. US inflation data has come in at a 41-year high, 9.1%, rather higher than what the street was anticipating. Talk to us about how now this could affect the rate hike cycle for Fed Reserve. All eyes will now be on that.
Well, good morning, Karunya. Yes, absolutely. Scorching hot, 9.1%. I noticed that commentary coming from Atlanta Fed President Raphael Bostic saying that everything is in play. In other words, that there's every chance that they may spike at 1%. That would be just a massive move. That's never been done before since the early 90s, since they've started using these tools. And 26 to 27 July as the blast-off date for that next Fed meeting. And are we going to see 1%? I'm pretty sure Canada overnight was 1%. So maybe that's the theme that we're going to move on.
Okay, but what do you think? Are we close to the peak now that the inflation has come in at such a high number, 9.1%? Do you think it's pretty much the peak, or can we expect further worries and concerns and further deteriorating macros going forward?
Well, when I look at Karunya, when I look at the countries like Pakistan, Hungary and South Korea, many parts of Asia are all spiking rates and hitting them up higher due to inflation. Then are we really at that peak of 9.1 for the States? Are we going to see double figures? Only the future. It's easy to look back in October and tell us, well, hang on, in August we're at 9.6%. So these are the issues that we've just got to work through. Still high energy costs. You've got crude sitting at Brent crude at $100 a barrel. We've got a strong, very strong US dollar at incredible numbers, parity against the euro, 138 for the yen. 118 for the pound. So I think there possibly is further upside for inflation.
I want to also ask you your view on emerging markets, especially, with focus on India. Now that, rupee continues to weaken, there are inflationary concerns, FPIs continue to sell. What should investors in emerging markets like India expect now?
Well, I'm interested to see what the continuation, if we see bear market territory or continued softness for US equities, and that contagion runs across the globe. So we're going to see a continuation from that first 6 months of the year into this quarter, and then the next quarter. We've got US earnings coming out tonight. They're the start as far as the banks. So it'll be interesting. I want to see how the Q2 performs, and then that will give me a good, I think, mind's view where we're looking for Asia, emerging markets. I just think sit on your hands at the moment, but I think there'll be some surprises or continuation of surprises, Karunya, over this quarter.
Okay. Now that I have you here, Peter, I also want to, address what's happening in the oil markets. WTI crude right now, as we speak, is trading below $97 mark. Even, Brent is just perched below that $100 per barrel mark. What is the way forward? Because, we're reading very, very divergent views coming in from global brokerages as well. On one hand, you expect a massive downslide for crude, factoring in a recessionary scenario, and on the other hand, there are forecasts of $130, $140 as well. So what do you think is likely now?
I think a couple of things. First off, the Russia-Ukraine situation, if that was to ratchet up and get far worse, I think there's a war premium in there that's baked in, probably $15 to $25 a barrel due to that situation at the moment. So let's just put that on the table. Secondly, we've got some form of demand destruction, considering that the price of crude at $100 a barrel. I'm seeing the cratering of base metals, aluminium, copper, tin. I've got aluminium well back, copper at $7,300 a metric ton. So as they continue to come back, that could be the start. We could see crude softer from here. I still believe it should be at 90, not 100. At least, but that's the trouble. You've got war premiums and you've got certain situations as far as supply constraints that are impacting the market, Karunya.
Okay, all right. Interestingly, Wall Street hasn't reacted too much as far as the inflation number is concerned. Yes, the markets did settle lower, but the shock factor was not really there. So, has it all been priced in the markets right now, and all eyes will now be on near-term events like earnings, etc.?
I think so. I think it was. We've got to be mindful. Inflation is what we all feel. I feel it in Sydney. You feel it in Mumbai. I'm sure that everyone, your family feels it. So it's not as though it's a surprise. We're feeling that in the hip pocket, the man and woman of the street all over the world. This is just the issue with inflation. So I think that when we look at the equity markets and I look at overnight, it was just off a fraction. The Dow was down 0.67. I had the NASDAQ only off 0.15. So a lot of that was already baked in. I think we're already understanding that we could see a 9, maybe even a 9.1. So, yeah, that bad news was already in there. If it starts to get to 9.5% to 10% in the next couple of months, then I think that will create a lot of fear to the Fed and stagflationary worries.
Okay, let's hope the worst is behind us and, things will ease in the next few months and next few quarters. Peter, thank you so much for taking time out and chatting with us and sharing with us your assessment of the market and the way things are.